All right, welcome to Coffee with Marcus and Market. In this show, we are going to talk to you about what's happening in the markets and how we are trading it. Today is Friday, December 2nd, and we had the big jobs report. So we'll take a look at how the markets are reacting. We also need to look back on Wednesday because was Wednesday's rally an overreaction or will the markets continue to rally? And most importantly, how are we trading these markets and how are our positions doing, especially since today is expiration day. So lots going on here. This is your first time? Hi, I'm Markus Heitkoetter. This super smart guy over there is my head coach, Mark Hodgson. We're real traders who trade live accounts. So therefore, we got a lot of trading experience and we're showing you how we trade these crazy markets. So trust me, we know our stuff and we're not afraid to tell you like it is. So if you're looking for some honest insights into the fascinating world of trading, you are in the right place. And geez, I mean, today, really kind of a crazy market.
It has been an interesting day, Marcus. We uh, saw that, or you mentioned, Wednesday and Jerome Powell and his comments and that big rally. You see that big bar rallying to highs that we haven't seen since early September in the S&P. Yesterday, a little bit of a mixed bag, and then today a gap down and a rough start.
Yeah, and I mean, right now, if you're looking at the S&P, even at a 5-minute chart, I mean, this is where you'd say, there's not much going on here today, right? So I believe that we have to switch over to the overnight futures markets because this is where we see what has been happening. So overnight, the markets have been quiet, and then boom, a massive move down in the Nasdaq, more than 2%. I mean, right now, clawing its way back, but that was a big move.
It wasn't. It was all because of the jobs report at 8:30 a.m. Eastern time. We mentioned that this week was filled with items on the economic calendar that we needed to pay attention to. The jobs report comes out every month, first Friday, and an interesting report, interesting numbers.
Interesting, because I mean, right now the Fed wants to slow down the economy and wants to cool the labor market, and it's still coming in blazing red hot. So, I mean, expected was that only 200,000 jobs would be created, but no, it's 263,000, which is less than in the previous months, but way more than expected. But I think this is the big one here. The average hourly earnings, they rose at 0.6%, which kind of is good because if we look back here of what's happening now, the wages were up 5.1% on a year over year basis, which is bridging the gap to the inflation that is over 8%. But that's not what the Fed wants to see.
Exactly. The Fed wants the job market to cool down and wages to cool down. They want traders. They want people to stop spending money so prices are not high, right? And in this case, the job market is still strong. You mentioned that wages on a year over year basis at 5.1%. That's double what we've seen with the 20 years before the pandemic. So that's a lot higher. And then you also mentioned non-farm jobs, 263 versus the 200 expected. The unemployment rates, probably the most minor of those three key data points. So hot jobs, strong jobs, and traders not liking it. That explains the big drop overnight.
Right, because now the question is, what will Powell do? And I mean, he talked on Wednesday. That's what we just mentioned. And on Wednesday, he kind of said, yeah, you know what? We are thinking about being less aggressive. And the markets definitely liked this. This morning, a different story. Let's actually go to the 10-year yield that this morning was just jumping on these news. And right now, elevated. I mean, we have been trading around 3.5%, now back to 3.6%. I mean, still way below the 4.4 that we hit earlier this year, but definitely a big move here because now the question is, okay, what will Powell do? Will they actually slow down the rate hikes, or will they say, well, that didn't work at all, so let's just keep going?
And that's the thing. The hikes themselves in theory, with economic theory and monetary policy, it's a great way to bring down inflation, but they haven't worked as fast as they would have hoped. And the Fed knows that a big problem here, or a big reason why they haven't been as effective, is that the jobs market continues to be hot. So will he readjust things? You have the hawkish comments versus dovish comments, and traders are really hoping that he would be a little more dovish, less aggressive with these hikes. And if inflation is falling and jobs are weakening, he could definitely do that. But with a jobs number like this, it's hard to justify slowing down considerably.
Yeah, but market participants are still believing that the Fed will only hike interest rates by
Sure.
3/4 of a point. Interesting, this morning, this went down to 72%, right now back up to 77%, because this were, again, I mean, the Fed keeps reiterating it. It's one data point. Of course, it's good for the economy, but right now, that's not what the Fed wants. And this is why the markets. I think honestly, what is really contributing to the move today is not necessarily the data, but that uncertainty is back. Like, okay, what will they do? They just said that they will be less aggressive, and we were like, now we know what's going on, and now it's like scratching our heads again. Like, what exactly will they do? Plus,
I
also, yeah, go ahead.
Oh, I was going to say, I absolutely agree. However, it looks like traders have actually digested this information pretty well, because if you look at the VIX is down. It was higher. So that's the fear index. And when it spikes, it's because of the uncertainty. So it spiked at the open, but we've clawed back about half of the losses that we saw overnight. And the VIX is down. So it does look like, although you had that initial shock, that traders are kind of digesting this and going, oh, okay, one more speed bump, but not a roadblock.
Yeah. Now, before we look at our positions, I mean, right now the 200-day moving average. I mean, the S&P 500 is battling with it. I mean,
Yeah.
previously it acted as support. Then on Wednesday, on the good news we broke through, we're trading above, and right now we are trading right at the 200-day moving average. So I do believe that today will be an important day. Will we stay above the 200-day moving average or move below? So will it act as support or as resistance? And I think that's going to set the tone for what's happening here in December, since we're now on the second trading day in December.
And that holding up above the 200-day would be a nice thing. We also, right now, even in spite of today's losses so far, it looks like the S&P and the Nasdaq will finish higher for the week. So that would be back-to-back winning weeks. So nice little start to December.
Yeah. All right, let's talk about how are we trading the markets? What is happening here with our position? And going in there. And I think one, because we have been talking about it and I have it up here, is LVS. LVS, we have been in this trade for quite a while, collected a lot in premium. I mean, LVS, our cost base is 46.86, and at some point it was below 30. I mean, so we were massively underwater in this trade. It has clawed its way up, and today, an important day, because we sold the 47 calls, meaning that we might get called away. So today for us is we have to make a decision. Do we want to get called away and be done with the trade, or do we roll it and have another week of fun here? And it's really interesting because, I mean, you have said you're done with it. I'm still going a little bit back and forth.
And I think that's fair, because if you look at the numbers that you can have on the roll, it looks pretty solid. So I think that rolling is a good option here. The the day's not over. So it could be that we close below 47 and I then need to reassess what I want to do next week, whether I sell calls or if there is a nice little pop, if I just sell the shares and be done with it. But I am ready to move on. If we had that peak in February where we got above 48 and then quickly reversed. So could that be resistance? This week, 48.29 was the high. Previously, 48.27 was the high. So I just
But
don't want to.
here's the deal. Okay, so that's on the one hand. On the other hand, right now for roll, we could actually get 60 cents. So for me, this would be an additional $2,000
Yeah,
to the almost $20,000 that I collected in premium, bringing down my break even further. But yeah, I agree. That's a tough one because we have been in this trade for quite a while. I mean, it's
longer
really
than
kind
normal.
of
Yeah.
time to move on.
Yep. So I'm ready. I'm ready.
But let's see. I mean, the day is not over. If we close below 47 today, then of course we will be in this trade for another week, and then we will reassess on Monday what's happening. If we stay above
Hey,
47, we might get
Marcus,
called
go
away.
back to the calculator. Sorry to interrupt, but go back to the calculator.
Yep.
I'm seeing 73 cents on a roll.
Okay, I looked at it earlier before we got into the show. That's $2,628 for me. You
Yeah,
see,
because
just when
we
I
pulled
was
back a
saying
little
that
bit.
I'm ready to move on, now you're tempting me again.
It
Well,
actually
we'll
could
keep
be
an eye on this,
75.
huh?
It might even be 75, 76. That looks like the mid.
Okay, how much do I need for $3,000? Would that be 90 cents? No, 85 cents. Maybe that would be my line in the sand. If I can get 85 cents, which would be an additional $3,000 in addition to the 19,000 something dollars. Okay, I'll keep an eye on this one. I'll keep an eye on this one. Now, we also have quite a few other positions, and we entered into a new position today.
Yeah.
But you guys, let me know, is this helpful as we are going through these trades? If it is, click on like really quick, and then we'll walk through our trades in more detail here. Because yeah, we had a lot going on. Though, click on like. Okay. So let's talk about the other trades that we are in, and I have another one that today is the day, might be the day. I have been in TPR for a while. I sold 37, the 37 calls expiring today against my existing position of 2,700 shares. Also here, I got a sign at 37. At some point, we went as low as 27. So this trade has been underwater. I've been able to sell calls and puts. So here I collected more than $12,000 in premium. And right now, it seems that I'm getting called away. This is a trade that I've been in since March, but hey, still nice profits unless it pulls massively back. I think that this is another trade that's getting called away today, and I'm fine, ready to move on.
Yes, yes. No, that I mean that one was a little frustrating because it pulled back and it just wasn't at a rescue level to bring down your cost basis nicely, but it was also just out of call selling territory. So you had a ton of patience. I think that you traded it well, and I will bet money that this is getting called away, and now you have more buying power, and one of those that you've been in for a while is freed up. So
Yeah.
good trade.
Talking about rescue missions, I mean, I did fly a rescue mission on NVIDIA. Originally, I got assigned at 195, flew a rescue mission when it was trading as low as 110 here. And therefore, I was able to bring down my cost basis to 160.91. Now, yesterday, NVIDIA looked super strong. I did have yesterday the 170 calls expiring today. And then I decided yesterday to actually roll this up for another week because I'm not done with NVIDIA yet. So, right now, yesterday, I rolled it into the 175 calls expiring December 9th because this allows me to nicely benefit from a higher stock move.
Nice.
I
Yeah,
actually want to go to the
I like that.
calculator and show you because yesterday I rolled up to the 175. I only got 10 cents. So, I mean, at least I still got money. Not a whole lot in premium, but here's the deal. Right now, if NVIDIA by next Friday closes above 175, I make $15,609 on the stock. This in addition to all the premium that I've collected. So that would be a really, really nice boost. And this is why I decided to do it, especially considering that my break even is fairly low at 142.92. And this is where, okay, if we are pulling back and I don't know, I'll sell it again. I'll be fine with this. I'm fine with this. I like this.
There's a nice little trend line there.
Yeah, right. We should draw it because whenever you draw a trend line, the markets is adhering to the trend line. There's one of the things that I learned from you because you like doing trend lines. So let's just make it a big and fat trend line. I know that you usually do your trend lines in orange, right? There we go.
Yeah.
There it is. There it is. It will not fall below this. All right. couple of more trades here that we have right now. So we're still in the Google trade. With Google, you were able to sell the 104 yesterday.
Yep.
So very happy with this. Google is pulling back a little bit today with the overall market. I got assigned at a higher price than you, so I've not been able to sell calls. And here, very similar, like TPR, not pulling back enough to fly a rescue mission here.
Exactly, but nice at least for me to be able to sell calls yesterday. I got 82 cents. I have an order to close those at 16, which would be essentially 80% of the max profit. Right now, it looks like there is about 65% of the profit based on the 82-cent credit I received and where it's trading right now. But my plan, if I could buy it back at 80%, I'll do that to free it up. And I would love to do that today and then see it spike next week and sell calls again.
Right. All right. Then we also have WSM, Williams Sonoma. We both entered this trade earlier this week. For me, it was the 109 puts expiring today. For you, it was the 108 put expiring today. And I mean, unless something dramatic happens, I mean, it's trading right now at 115. We'll just keep the premium, not get assigned here.
Exactly. This one was trading in nickel increment. So yesterday, I think it was 5 by 10, 5 by 15 for most of the day. I had an order to close at 5, and it just never filled. And this one will just expire.
Yeah, exactly. So, and here's the deal. This is where I was looking at today. So, NVIDIA, I actually have two positions of NVIDIA in my portfolio because I did fly a rescue mission. So, this counts at two. So, that's 2, 3, 4, 5, meaning that since I like to trade up to 5 positions in my portfolio, kind of full. But with TPR most likely to be called away today and WSM expiring worthless, we decided to take another trade. So
Yeah,
today, CTRA popped up.
exactly. So we were doing a session today, and it popped up, and I like it. It has some nice short-term support, and we sold the 26 strike. Both
Right.
got 20 cents on that, which was it what, 33% annualized? I think it was.
Yeah, 36 put, and this is expiring December 9th. So we did that. Let me just make it in bold, put in the coordinates of 26 so that we see what's happening. There's the text, show it. Let's actually put this below here. Yeah, and this was quite interesting because here, let's actually move over to CTRA and a 5-minute chart because we were both looking at it when it was trading right around here, around 27, 26.95.
Yep.
And this is what I said, you know what? I'm going for 25 cents. You said, I'm going for 20 cents, taking this. And just to look at it on the calculator, there wasn't a whole lot difference, right? So with 20 cents, as I said, 35% annualized for me, 25 cents would be 43% annualized. So not bad at all. And I kept it at 25 cents until I saw this breakout here. And when I saw this breakout, I saw, whoa, there's still somebody who wants to buy it for 20 cents. So I was able to sell it for 20 cents before it moved up. And I think this was a good move. So I lowered it. Usually I like to beat you, and I know that you like to beat me in terms of fills. But here we both sold it for 20 cents going to next week. And this is going back here, 20 cents. There we go, 35% annualized. I'm liking this trade. I like this trade.
Yeah. Had low correlation to the other stocks in my portfolio, and should be the case for you as well. I think it was a nice little credit for a down day.
Yeah, absolutely. So, I mean, if you find this helpful, click on like, and also, if you would like to learn more of how we trade these markets, take a look at this video here. So there's a couple of videos that explain more how we are trading. Check it out, and then we will see you next week. Have a great weekend.
Happy trading, everybody.